Last year at this time, Meta was navigating a crisis of confidence that had pushed its stock price to its lowest since 2016. Sales were dropping, TikTok was rising, and CEO Mark Zuckerberg's bet-the-house wager on the metaverse was looking like a money pit. Wall Street saw a very different story play out in 2023. As of Friday's close, Meta shares are up 178% for the year, on pace for their best year ever, topping the 105% jump in 2013, which was the year after Facebook's IPO. At $334.92, the stock is roughly 12% below its record high in September 2021, near the peak of the latest tech boom. Among companies in the S&P 500, only chipmaker Nvidia had a better year, climbing 235% so far. Meta's mega bounceback validates Zuckerberg's declaration in early February that 2023 would be the company's year of efficiency, following the stock's 64% plunge in 2022. Hefty cost cuts were at the top of his agenda, with Facebook's parent company cutting more than 20,000 jobs and Zuckerberg acknowledging that economic challenges, stepped-up competition and advertising losses, caused our revenue to be much lower than I'd expected. After 3 straight quarters of declining sales last year, growth returned in 2023, and for the third quarter Meta recorded expansion of 23%, its sharpest increase in 2 years. The results were driven by a rebound in digital advertising and market share gains over rivals Alphabet and Snap. The biggest catalyst, according to Longbow Asset Management CEO Jake Dollarhide, was Zuckerberg's change of attitude, and his willingness to listen to shareholder concerns instead of seemingly dismissing them in favor of his preferred mode of operation. While Zuckerberg continues to invest heavily in the metaverse, which he sees as his company's future, he's refocused the business toward what actually matters today, advertising, and responded to investor concerns about out-of-control spending. It was the change in tone from Zuck, Dollarhide said. He went from thumbing his nose at shareholders, and talking about the billions he was spending on the metaverse, to listening and communicating in a different way, Dollarhide added. Plenty of challenges remain as the calendar turns to 2024. Meta said in its latest earnings report that the digital ad market is still rocky, in part because advertisers are weighing the potential impact of the Israel-Hamas war. The company is also dealing with a number of new lawsuits that allege its products are harmful and addictive to children. And virtual reality continues to be a niche market, despite Meta's hefty promotions of its new Quest 3 headsets. As long as the core business is humming along and is kind of improving, I think investors will probably continue to give them a pass, said John Blackledge, an analyst at Cowen who recommends buying the stock. Meta declined to provide a comment for this story.